Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. As far as the market is concerned, it was a quiet day. Indices finished around the flat line, but something interesting we saw sort of the narrative that we saw for a lot of this year, especially over the last few weeks, sort of flipped on its head a little bit. You had social media stocks, you had 3D printers pull back a little bit. Both those sectors really got hurt, especially social media. And then on the flip side, you saw a lot of basic material stocks, Chinese stocks do really well. We talked pre-market about how the Chinese markets were higher overnight, finished higher overnight with healthy gains, and so we saw some of that carry over not only into Chinese internet stocks, but to basic material stocks that could benefit a lot from the recovery in China. So I'm going to go ahead and take a look at the chart of the S&P and just run through some of these charts quickly for you guys. Like I said, in the S&P, it was a quiet day, finished around the flat line. I think just a day of rest for the indices after that Santa Claus rally we've seen over the past two sessions, and we're extended a little bit from here from the 8 and 21 day moving average, so healthy to see a little bit of that digestive type action. We take a look at the chart of the FXI. We talked about how it finished higher overnight, more than 1% to lead all world markets, and that carried over into, like we said, into a lot of different themes that we saw in today's market. But first I'll jump through some social media stocks. Like I talked about, that sector had been absolutely on fire. Twitter, the small float, people have been buying it up, but Twitter really got punished today after a downgrade this morning. Take a look at the chart of Twitter, and the picture tells a powerful story here. A picture's worth 1,000 words. You can see that big, almost parabolic type move that we've seen over the past few weeks. It IPO'd, sort of was quiet after the IPO, and then just went on that relentless tear, but then today gave back multiple days of gains. Despite the fact that it traded down more than 12% on the day and closed on the lows, it still only engulfed 2.5 days of price action. So you'd think a 12% loss, obviously it's not healthy to see a stock have that type of volatility, but all in all, just giving back 2.5 days worth of gains isn't the end of the world for Twitter. Still huge valuation, big run up from the IPO, and as long as it can not match this type of day next week and continue to the downside with that type of ferocity, I think you'll get some dip buyers that'll look to get involved here for maybe a potential run in 2014 for Twitter. And then Facebook, sort of like it was a little bit a dummied down, watered down, I should say, version of the rally that we saw in Twitter. The sell-off wasn't quite as extreme in Facebook, given it's a little bit more of a mature stock at this point. But you saw it sort of threaten this uptrend that's been in place since that Red Dog reversal, and then the news that it was going to be added to the S&P 100 and 500. So you can see here, we'll draw the uptrend line. This is sort of coming into jeopardy now with today's sell-off, and it'll be interesting to see next week whether we can bounce off this short-term trend line and continue to the upside. But I think overall the social media sector, so you see Facebook at new highs, you see Twitter with the type of move that we saw there. I think it's healthy to see a little bit of a pullback, some corrective type action going into next year to give us a little bit of room to allow us to be bullish on these names a little bit. And I'll run through a few more charts quickly just to give you an idea of what happened. Not exactly social media names, but just these new media, recent IPO type names. Yelp also got punished. LinkedIn to a lesser degree. It's been quiet compared to the other social media names, but LinkedIn down about 2% today. Zillow, the real estate internet companies, Zillow and Trulia, both got hurt today with big percentage losses. In Pandora continues to the downside. This is one that I think increasing competition from Spotify and the Apple internet streaming service I think are hurting Pandora. This is one that I'm particularly bearish on in the group. And then 3D printers. It wasn't as much carnage in the 3D printers as there was in social media today, but a Red Dog reversal to take note of here in Triple D, as we were really strong early, especially pre-market. We were up, and then we opened a little bit lower than we were when I did the morning call, when I started doing the morning call at least, and then we did a clear Red Dog reversal today, so something to take note of there that could lead to some downside type action. SSYS, not quite as extreme, but a similar type reversal. ONVO, there was that report of them boasting that they could create a human liver, print a human liver with their technology in 2014. Didn't get the type of squeeze that maybe some were expecting. And then VJet was very weak, 3 or 4% loss, I believe, in VJet. So just some air coming out of that group a little bit. Social media stocks, 3D printing stocks have been leading the market, and those are the ones that were the weakest today. So overall, I think this could set the stage for some choppy type action until the new year. So we have 2 sessions next week until the new year. I think they could be a little bit choppy while you have some of these tax-motivated selling and stuff like that involved in the action. So, and like I said, while those stocks were weak, some of the stocks that were that were the weakest in 2013 were the strongest during today's session. So those are stocks that are going to depend a lot on a rebound in the Chinese economy. The Chinese market was weak this year. The Chinese economy lost a lot of steam, obviously, and so basic material stocks that are most exposed to growth in the Chinese economy were weak as a result of that. But like I said, Chinese markets were strong overnight, and so we got a big tick higher in a lot of these basic material stocks. We'll start with the coal sector, which that's a combination of economic upticks in places like China and even in the U.S. But also people are talking about the idea that the upcoming midterm elections of 2014 could have a big positive impact on coal stocks. Regulation is a big obstacle for coal stocks because obviously politicians and climate change and all that type of stuff. People are thinking that Republicans could have an advantage in the midterm elections because of their strength on the economy, and they could be friendlier to coal stocks, and it could lead to overall Democrats as well being friendlier to coal stocks, and that could have a net positive impact on these companies. It's just one of the narratives that's helping to explain this rise in coal stocks, but I'll go ahead and take a look at a few symbols here. We talk about ANR, Alpha Natural Resources. Today, really nice strength, sort of been finding its footing. As we zoom out a little bit, we'll go to a weekly chart on some of these, just to give you a better picture. Bottomed out this summer. Around the low here was 478, so really nice percentage gains from there for this coal sector that's been written off. You had solar stocks going wild and this and that, but don't forget about our old friend coal. And then BTU, Peabody, really, not as impressive move as ANR today, but percentage-wise, nice gains there, looking like it might break above a little channel that it's formed at lower levels here, and also bottomed out like all coal stocks did during the summer, so something to keep an eye on there. And you take a look at Arch Coal, ACI, decent gains there as well. Looks like it could challenge some pivots and get out of this lower channel, but overall just something interesting to take note of, the strength in coal stocks, and definitely something to keep on your radar to see if it continues over the next couple of days and into early 2014. Walter Energy provides metallurgical coal for the steel industry, and I'll talk about U.S. Steel here in just a second, but sort of combines two themes in terms of coal and steel. But anyways, we can go back and take a look at the chart. Really big igniting move in Walter. This is one that we've had on off the charts a couple times, looking for, this is the weekly chart, looking for this move out of this pivot, or above this pivot from, this is back to the daily chart, excuse me. Let me go to take a look at the weekly chart first. So we were looking for a break above this lower channel here in Walter after it bounced during the summer, and that's what we got this week with a really nice move above this. We were also looking for a break here back in early November higher. We got it briefly before breaking back down, but this is one that looks like, again, it's finding its footing. These are a little bit choppy when you're talking about trading laggard names, especially into the end of the year when you're going to have a lot of tax loss selling. A lot of people are holding a lot of stocks right now that posted huge gains in 2013, so what they're going to be doing is looking to sell stocks like a Walter Energy or other basic material stocks that were weak in 2013 to offset their capital gains from all those winners that they were holding this year. So impressive to see this type of strength before the end of the year. Maybe a lot of that tax loss selling has already occurred, but good to see strength in the face of that potential headwind. So I think once the new year starts, a lot of these laggards that were weak this year and maybe were held back a little bit late this year as people were preparing for some tax loss type selling, these are names that could really get a big lift in January, February, the first quarter of 2014. So I think something to keep an eye on. Walter, definitely. We don't have it on off the charts right now, but it's a name that has been on our virtual trading floor. Traders have been trading it, looking for it. Big short interest, like I said, combines the coal industry and steel industries, which if you're talking about that narrative of the Chinese economy picking up, even the U.S. economy starting to accelerate a little bit, those are the types of stocks that you want to be involved with. And I think Walter is a definitely interesting candidate as a laggard type name. And U.S. Steel, we'll stay with that theme. I'll look at the weekly first. You can see on the weekly chart, really nice bull flag had formed since that run up from midsummer like we saw in a lot of basic material stocks. Nice bull flag and then an impressive weekly breakout this week. Take a look at the daily chart. You can see that move this week. Today, nice extension up to new 52-week highs. So impressive action in U.S. Steel. in terms of technicals, this is one of the strongest of those basic material stocks. So maybe if you're looking for a higher quality type name rather than one like Walter, I think U.S. Steel could be at the top of your list. And then Cliff, CLF is a name that if you've been on T3 Live, you know I've been involved with personally. Another laggard type play, an iron ore, also coal related type name, not coming up for me right now. I'll see if it works on the weekly chart. You can see on the weekly at least, like the others, bottomed out mid-summer. It's had a nice methodical move. This one's one that, because I've owned it, I've been watching closely to see the type of movement that you get in. If you were trying to day trade CLF, you probably would have gone crazy this year, because the stock will rally, it'll squeeze. It's another one with big short interest. It'll squeeze, and then the next day it'll have big losses, and then it's just doesn't trade very technically sound, I guess you could say. It doesn't give you a lot of defined patterns and multiple day follow through. It sort of squeezes and chops around and then squeezes again, and it's sort of hard to get a hold on it, but it's another one that theme of China picking up and everything like that could be a laggard name to watch in the first quarter of 2014. I think this group is going to be strong in the first quarter, so something to keep an eye on. And then we talked about China. These names were strong, and then also Chinese internet names were strong. We'll just run through the list quickly. Baidu, look at the daily chart on that. Baidu, impressive gains today to erase 3 days of losses. Sina, big move to engulf multiple days of price action and get above this pivot. Dangdang, sort of like a YouTube of, no, it's an e-commerce in China. Sorry, I was thinking of Youku. But Dang, nice move today, even though it closed off its highs. Wuba, 58.com was actually the most impressive recent IPO, another Chinese e-commerce site, which is sort of a hot trend right now with all that talk about the Alibaba IPO. Made a new high today, so this is one to keep on the radar for a potential short squeeze or move. I'm not sure what the short interest is on it, but one of the biggest winners today. And then KNDI is not a Chinese internet, it's a Chinese electric car company. One of the biggest winners today, huge percentage move, and I think also another speculative type name to keep an eye on for at least momentum in 2014. I don't know a ton about the fundamentals of the company, but when you start getting, it's sort of like Organovo, ONVO. It's in the 3D printing sector, and it's also biotech, and the company is not even close to being anywhere, being able to make any money. But you combine something with KNDI, like electric cars. People get comparisons to Tesla. They see the strength that Tesla stock has had in 2013, and they say, man, I want to be involved with a name like that. They don't care what the fundamentals are. They just want to be involved in something that's being mentioned so positively, like electric cars and everything like that. You're going to get some big short squeezes like we saw in KNDI. And when you get a big igniting bar like this in a stock that's highly shorted, it can lead to more upside. So I think this is one that could have more upside. A little bit hard to buy after today's igniting bar, but maybe I think the ideal scenario would be a little bit of rest, a bull flag type setup form, and then hopefully get a break above that flag if it were to form. But that's about it for today's daily recap. Like I said, the theme was sort of things were flipped on their head, and I think you could get some choppy type action Monday and Tuesday next week before the new year. We continue to work on Scott's 2014 outlook. You know, we sort of have the nuts and bolts to it already formed, the nuts and bolts of the write-up, but you obviously have to see the way stocks perform into the end of the year, into 2013, to get an idea of where things are going to be. You don't want to say, oh, I love Twitter to break above 70. It's a perfect example. Twitter's something that we liked, and maybe we're going to include in 2014 predictions, but you see a big 70% run-up in December, sort of hard to still like that and put that in the 2014 outlook. So we're continuing to finalize that, getting some closing prices for 2013. And if you haven't watched our interview segments from the interview we did last week, we talk about a little bit about Scott's process, his experience, some of his previous calls in 2012, 2013, the way those worked out, and then we do a little bit of previewing of 2014 as well. So I think it was a really fun interview, a good way to get a window into Scott's process and Scott's experience, and a good way to learn a little bit about what we're going to be providing in the 2014 outlook. And I would definitely recommend checking out information about 2014 outlook and ordering that. I think it's going to be really value added, provide you a good roadmap for next year. Anyways, this has been John Darsie, your editor-in-chief here for the Daily Recap. I won't be here on Monday and Tuesday. We'll have some other people filling in. Evan Lazarus, who hasn't really been on video as much and on T3 Live as much, will be filling in on Monday with Brittany. And then we'll have Steve LeVay and Rob Smith holding down the video fort on Tuesday, providing you a little different look into some things. So that'll be a lot of fun. Get some new voices involved to the end of the year. And then Scott will be back here, and I'll be back here at the beginning of 2014. So thanks for joining me. Everyone have a safe and happy new year, and we look forward to getting after it again in 2014. Have a good one.